We're going to go over to the newsletters tab. We're going to check out the opening call newsletter by Basil Chapman. You've heard me talk about it before, but I'm going to say it again. This is a fantastic newsletter. Of course, if you subscribe to it, he does a very nice long form video on Fridays, Saturdays, kind of going over everything that happened during the week and what he's looking forward to in the next week. He's been very active recently. People who have subscribed to this, post Liberation Day have really enjoyed this newsletter. Additionally, another great value added for the opening call newsletter by Basil Chapman is going to be these 90-minute live subscriber webinars that he does. He did one in November, so you get to check out all of those. It is fantastic. Additionally, he is on TFNN about 10 a.m. Eastern time. Every day the market is open for the Tiger Technicians Hour. Basil, how are you doing?
I'm doing well, Jacob. How are you?
I'm doing well. Quite an interesting market today, to say the least. I'm curious to see what you're looking at, because I do my kind of like fundamentals, right? Kind of sentiment, what people are thinking, but I really like getting into these absolute technicals that you have. So what are we looking at with the Dow right now?
So actually, while you're talking about technicals, let me just go straight to this. I was going to do this a little later. I'll do this right now.
Yeah.
So I look at three core patterns: straight up, straight down, a cup formation. It could be a V-shaped formation, which you're going from one point down and then back again, or an arch. You're going from one point up and then you come back down. It could be an inverse V. So there's just three patterns: straight up, straight down, cup, arch. You can mix them up, 1 and 3, 1 and 2. This is 1 and 3. It's called the H pattern, or dreaded H, when it takes out the left side low. And that says to me that you got to be very careful. If you take out the left side low and within 2 bars, you don't go above it. So what did we have? We had that H pattern right here in the Dow at 40,661 up to 42,821. Comes down, takes it right out and goes to the low of the 7th of April. That's an 18% correction already. And then it runs up very sharply. Of course, there was the Trump relaxing of the little pause, and we got a retest of that, and now we've come down and we're at this H pattern. So we've got the break perfectly, with suspense waiting to see what happens in the arch formation.
Wonderful. Basil, please stay right there, folks. We'll be right back with Basil Chapman after the break. Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. We are joined right now by Basil Chapman, author of the Opening Call newsletter. Basil, before we went to the break, taking a look at some of the patterns you look at, and I believe we're about to dive into the Dow chart.
So I've got quite a lot to go through, so let me just do this real quickly. So this is the arch formation. If it fails at a peak A or a B, the first or second peak, and then takes out 50% of the arch formation, that's where you usually get the acceleration down. So today I say to subscribers, really important, there has to be a good rally above the high of the gap down from yesterday and a close above it. And if it does that, we will have time to look at a potential H to an M shape, a lowercase m shape pattern. So the day's young. But I'm with you. This is very suspicious, this particular move right now.
Yeah.
But what's fascinating, and I'll go through this quickly, in each of the sectors, and I wrote down, because you had just mentioned, you spoke about GE. So I'm looking at this and I'm saying, within each sector, there could be one stock that's doing really well, but the others are doing really poorly. For instance, look at GE. You spoke about GE Aviation. Nice move up, good earnings today, up 9. Just look at the same sector. You've got RTX, Raytheon. Look at that chart. Down, gaps down. It's down 11. Look at this. NOC. It was looking great just 2 days ago, and look what happened. It comes down from the 544 level. Today's low is, excuse me, 450. So I say to subscribers, I'm liking a particular stock very much, but we want to give it a day or so, because look, even within the sector with the credit cards, look, Verizon has had a terrible time. It's gone from the 366 high back on the 3rd of March all the way down to 300, and it's kind of bouncing. MasterCard, same thing, way from 582.73 on the 3rd of March down to 460, having a little bit of a nice session today. So I said there's one that I like, but let's hold off one day, and that was Discover Card. And look, it's a much nicer pattern. It's got a trend line. It's starting to break out. So even within the sectors and the groups that we would normally be looking at, you've got some star performers and some that are very weak. So I'm saying this is a very select market. You've got to identify what you like. You almost have to isolate it from the sector. It has to be independently very strong. So here's another thing. I spoke to you last week. I said, I believe that the dollar, there's a chance that the dollar, which is very weak, could find a little bit of competition here in that Bitcoin might be finding some followers in the sense that it's gone through all the different tests that you would think for some kind of a currency.
Yeah.
And I think it's finding is ownership. I think they are now really big institutions. Look at this move today, up 4,200. We've been long for some time. And here it is at 91,750. Very strong move. I drew in the rectangle. I hadn't even looked at it for about an hour or two. Look at this. It's right up there. So this is what I'm saying, that regardless of what you're looking at, just step away from all the noise. And I believe me, every single economist, any friend that I have or anyone that's related to the economy just keeps telling me that tariffs can never work over and over and over again. So I'm saying, all right, forget about all that. If you want to be in the long side of the market, and we have some long positions, with some of our core positions, we're taking quite a bit off, but we've still got the core positions like Bank of America, Robinhood, etc. But here's something very interesting, that within the context of the pattern that you were just speaking about, and you said, I don't quite trust it. Look at the give back just from intraday, and this is not it sounded fantastic, up 1,100 points. Well, you know, we were into the lower part of the candle from 3 days ago. So a lot of work needs to be done to really produce the goods. So a lot of people are talking about gold. What's happening to gold? Well, this is a very strong move to the upside. It has a lot of technical veracity to it. Most importantly, though, there has not been the rotation from gold to silver. The question is, will it happen now? Well, you know, it's kind of had its chance. So I'm saying this is something that we've got to monitor closely, because I still consider gold to be part of the geopolitical economic insurance policy. It's like a little gold card is gold itself. So when I'm looking at this, if there is talk about some appeasement, say, between China, is something happening that's positive, it has to be global, because right now I look at this move in gold as more an international currency, commodity move as a safety factor. So until that really dissipates and goes away, I think we can have pullbacks in gold, and I'll talk about this candle right now. It's called, if we had to close right this minute, I'd call it a red inverted Chapman wave Roman candle. And what would happen is the next move within 2 days, it doesn't matter whether it's a daily or weekly or monthly, it's the bars, the next bar, if it sees a move that holds for about, let's say it's tomorrow, and it holds for about 90 minutes above 34.75, there's a real good chance we will test today's high of 35.09. If we close 2 sessions out of the next 3 below whatever the low is today, so far the low is 3183.2, then be careful. The body of this candle, which was the open price was at 34.35, 34.39, that's going to be very strong resistance. So on a purely technical basis, it's due for a bit of a timeout, just a pure technical timeout. But all the technicals are still very strong. So unless gold slides under 32.80 in the next 2 days, I think we can expect some kind of a high-level consolidation. There's nothing wrong with that. But I'm looking at the gold and silver. When I say gold rallies and silver says, oh, what's going on? I'm going to catch up. Then silver catches up, and then gold takes a breather. We haven't seen that. Silver's kind of been almost out of the picture here.
Agreed.
So I'm treating them as separate things.
You know, I think this is something I've been looking at with silver as well, right? And as you said, a lot of it is so much driven by geopolitics. China, of course, has been buying a ton of gold, right?
Right.
And silver, a lot of times, I guess, historically, you've had those kind of similar moves, right? But it seems disjointed right now, and I don't see where silver comes in and kind of fills that, that geopolitical gap along with gold.
It might independently as a commodity, but it isn't doing it in a usual rotation where they follow one another. That's really what I'm saying. Yeah.
Absolutely. And, seeing Bitcoin get almost, it's maybe I still think a little bit too soon to tell, but becoming disjointed. I mean, in the past, Bitcoin really was positively correlated with the Qs. Now, of course, the Qs are up today, but we've seen, few instances in the past with Bitcoin being up when the rest of the market is down, and that is a very unique move.
I do have a correlation, and that's with Robinhood. And Robinhood is up today, but in a way it's almost like the gold-silver thing because Robinhood is still lagging quite a lot. I think it's due for a period of rest, and that's what it's happening. That's what I'm saying. For about 6 or 8 months, maybe a year, I've been saying, think of all these different things like the VIX, like gold, like the dollar. Think of them all independently and do your homework because they all do different things at different times. The correlations that they used to have, like bonds, when yields went up, then the market used to suffer. None of that works anymore. So that's the same correlation that I have now with the Bitcoin and Robinhood.
Basil, thank you so much. See you tomorrow morning at 10 a.m.
Thank you very much. Have a good day.
We'll be right back.